Howdy everyone, welcome to the GTU. My name is Barry Holmes and this video is going to be on the in situ valuation of resource deposits. How to build a spreadsheet and have some confidence that you've got something that's a reasonable tool to work with to look for undervalued situations. Cautionary note, don't believe everything I say. $2 gold. This is what we're going to be talking about through this video, is how you build a spreadsheet as you're seeing here. And it uses gold equivalent ounces indicated inferred. This is a resource, not a reserve. So in order to build this, you're going to need a resource estimate, latest one possible, and it's basically usable until they move to a higher level of evaluation, which would be preliminary economic assessment or a pre-feasibility study. So in situ value, what it is the amount of gold that is, well, mineral in place and undisturbed, hasn't been mined, all has just been sampled and explored and drilled, and giving you enough data to do a resource estimate. So there's a lot of slides here, and unless you're really interested in how to build a spreadsheet or populate the spreadsheet with the data, you're going to find it a little boring. For the more geekier people like myself, this is all the data I've been able to collect over the last 3 years as I built this presentation. So bear with me. I'll try and share as much of it with you as possible, but a lot of it you're just going to have to stop and read it, and you're going to have to go over it several times to build it in your mind what it is you're doing. An in situ analysis is a useful early stage evaluation tool, but provides a lower confidence level in comparison to preliminary economic assessments. It does not take into account the cost of mining the resource, and it does not take into account whether the reserves are economic. And we haven't got the reserves, so basically we're saying we're not determining whether the resource is economic. We're just doing a very early evaluation of how much gold may be in the ground, and how does that relate to the valuation of the gold related to the share price? And then you can identify possibly you've discovered an undervalued situation that you may want to invest in. How to calculate the resource estimate? It's a matter of gathering a lot of specific data from the resource estimate itself, which is done by calculating the tonnage in the ground and multiplying the tonnage by grade and weights and other metrics and converting it to metal values. It can be done, but that is what the resource estimate is, so it's already done for you. But I know people that have done it on their own, and a lot of companies that, $2 gold as an example, majors would have their geologists doing kind of back of the napkin type stuff of doing the calculation. When you have a resource estimate done, it's done by a qualified person who is independent of the company, and then he provides you with the resource estimate, so his professional reputation is on the line. But for a major that's watching, they can just do the calculations in-house and they know exactly what's going on. Building an in situ valuation template model. Here are the things you need to consider. The pieces, parts, components, and constituents and factors that are necessary are the location, the jurisdiction, the infrastructure, such as power, roads, ports, airports, First Nations. What is the relationship between the exploration company and the First Nations in that area? And how far have they established that relationship? But in the Golden Triangle, the relationships that the exploration and mining companies have with First Nations are first class. I mean, it's the resource when it's mined will be shared and there will be benefits for everybody. So you want to have a resource estimate. check and see how many resource estimates done. Sometimes they do a preliminary one or the maiden MRE, and later on they will update that, which is the case with $2 gold. They've just done a recent update. And is the resource they're drilling closed off, or is it still open to growing? Or which it is in the case of Treaty Creek, the Goldstorm deposit that is owned by $2 Gold and Teuton Resources. It is still growing, it's still open in several aspects, and there are other potential discoveries on that property which have not yet been drilled out. And another factor that is involved is the price of gold. And certainly it's January 2026 and gold is on the way up, as is silver, as is copper. And those are the three basic metals that are in this deposit. So that is also something that would affect whatever spreadsheet, whatever company you are building a spreadsheet on. And then, you know, what's the mergers and acquisition potential? Well, a lot of that is kept very secret, but when you get to resources of this size, there's certainly non-disclosure agreements have been signed with various majors who want to stay on top of how that's evolving in case they decide they want to pull a trigger and buy it out, or pull the trigger and start a bidding war, which would more likely be the case in a huge discovery like this. Grade and mine design factors, that's not really something you consider in a resource estimate. This is preliminary to that. You're still trying to measure the size of the resource before you start to try and calculate reserves and get into higher confidence levels of your data. And that would come with preliminary economic assessments or feasibility studies or bankability studies. So building a template considers the factors that we're just talking about. So within the golden triangle, these are the pieces that you'd want to start putting together. So one is jurisdiction. This is in BC, Canada. It's a stable and supportive governments, and First Nations are very conducive to seeing mining, exploration and mining develop because it provides a benefit to their nations. So the location we're dealing with inside of BC, Canada is the Golden Triangle, which is in northwest BC and one of the world's most prospective and prolific mineralized locations in the world. Infrastructure, we have world-class modern infrastructure up there. It was built by the government to service the industry, to help the industry grow, and to support resource development. So there's new Highway 37 is fairly new in that the road was there, but it's been upgraded and paved, and is a really good access. And some of it is being extended and upgraded to fit in with the resource development. There's hydropower, which is a green energy, and that is provided by a major power line that was built along Highway 37 so that it can be spurred off into any of the mining developments. And probably an hour to Stewart or something like that. And there's two deep sea ports at Stewart, one major one that has been servicing the mining industry for decades. And there's an airport in Stewart which will handle VFR type airplanes, and then there's some satellite airstrips through the Golden Triangle. First Nations support mining with a priority to protect their traditional lands and at the same time generate employment opportunities. So there's positive engagement, there's established impact and benefits agreements, and everybody respects the cultures and traditions of the First Nations, and they offer a lot in the way of labor and services, including skilled training and equipment operation. When you're populating the database of your spreadsheet, It's important to understand, which we talked about earlier, is the resource closed off or is it still growing? The price of gold, I believe I have a chart going forward. I don't know if it'll be number 15 because this thing has been modified so many times. But you want to know what the price of gold is doing. Is it stable, trending off a bit, or is it trending up? And right now it's trending up quite aggressively. Strong upward trend also affected by massive international debt crisis. So as we look at gold trending upward, we're looking at it will move upward and stabilize somewhere because central governments are buying a lot of the gold and they're not going to want to see it go down. And in the future, it looks like that's going to be a piece of the fundamental reset of fiat currencies. So M&A potential. Multiple major producers and billionaire investors are in the neighborhood and watching from the sidelines. Jurisdiction. This is from the annual survey of mining companies, 2023 edition, and they basically summarized it as respondents expressed increased concern over British Columbia's trade barriers, the availability of skilled labor, regulatory duplications or inconsistencies, which would be between provincial and federal governments. And they had decreased concern or increased favorability in community development conditions, labor relations, and the uncertainty concerning disputed land claims. I mean, those are things that are being worked out, but the explorers and miners, they're focused on trying to develop a discovery or a resource. So this is the location of the Golden Triangle in northwest BC, adjacent to the Yukon and Alaska borders. And there's 2 operating mines, 16 advanced projects, and 6 past producers that I identified a year ago. Infrastructure, paved highway, Highway 37, and the Northwest power line. The transmission line is 344 kilometers long, 287 kilovolt transmission line. It cost the government $746 million when they built it back in, well, it went into service July 2014. July 2024, federal and provincial governments announced they would be investing $195 million to upgrade the highway and the infrastructure in order to access critical minerals that are in the Golden Triangle. This is the Port of Stewart. It's an all-season deep water port, and it is handling ore and concentrates coming from a couple different mines in the area to be shipped offshore for smelting. This is an overview of the town of Stewart. It's obviously summertime because it's wintertime. It'll be all white under 10 feet of snow. But as you can see, there's the channel coming up to Stewart, the airstrip, and then the housing and infrastructure of the community. This is adjacent to the airport. It's one of the hangars where helicopter operations are based, and in this year's series of videos we're going to have a helicopter doing a drill move, and that was done by Yellowhead Helicopters, and that's their hangar right there. And it's the only major service hangar. There's a smaller one there, but it's a great facility. First Nation provide local experience to the Golden Triangle. So when a company is engaged with First Nations and they're trying to establish a relationship of how things may grow with the potential of the resource growing into a mine, there is a lot of local First Nations who have a tradition involved with mining going back decades, and they have a lot of skills, and there are others that want to learn the skills to become part of the mining industry, and this is a gathering of them right here. It's basically the Tahltan Nation on the northern part of the Golden Triangle, and the southern part would be the Nisga'a Nation. So the Tahltan in the north have what they call TDNC, which is Tahltan Development Corporation. And that was started with, I believe, the Golden Bear Mine about 50 years ago. And the gentleman that set it up was a Tahltan First Nation person by the name of Jerry Asp. Okay, here's a 50-year chart of the price of gold, and you can see that from 76 to 82 there, it made a nice rise. And you go across the chart to about 2004 or something like that, and it started a nice increase going up to a peak in 2011. Now, if you look from that peak straight above where it says 2012, and you go over to about 2022, I believe would be about the right number, that is known as a cup. And coming off that cup, you'll see it go kind of sideways and dip down. That's known as the handle. So that is a very well-known chart called cup and handle chart. And they're famous for breaking out to a much higher level. And you can see that it started to do that around 2022-3. And it was rising up to $2,623 at that time in 2024, and we're now trading at $4,900. So it's still on that trajectory upward, which is good for gold exploration and silver exploration, because it means that the profitability potential of these deposits is ever increasing, which should attract more attention and make sure, and having that increasing value means that the majors are going to have to be fair in their offers if they try and take it over, and if they don't, they start a bidding war, which is something we all like to see. Okay, so when is the appropriate time to apply an in situ analysis? So this goes back that there's a period when it's usable to find undervalued situations. So at the star on the lower left, you have discovery. They're drilling, they're accumulating data, and they try and get as much as possible, because you don't want to do a resource estimate too early, because that kind of fixes in people's minds that's the total value. But some people like to do a resource estimate on the earlier part, because that means that you can attract attention that you have something serious. So in the case of Tudor, they've done that resource estimate, and it's not shown on the chart here, but they've done an updated resource estimate, and we're within that blue triangle. And then as it goes into pre-feasibility study, then that study itself is telling you what the in situ values are. So we're at the point where we can work it out and see if there's an undervalued situation, and that's the whole mission of doing it, because it creates opportunities that you see an undervalued situation to invest in that nobody else might see. Okay, this a lot of the things that are involved in exploration with news releases and resource estimates and PEAs and PFS, they have to comply with certain standards. And those standards are called National Instrument 43101. So the standards inside there related to news releases and terminology that you can use, like resource or reserve, and what categories involved in there. We'll show you that. You can study it up. It's a little confusing at first if you haven't seen it before, but it all starts to make sense. Especially if you have an overview to start with, then you're filling it in. Okay, if you look at the yellow arrow there on the lower right, it's talking about the independence of the person who is doing the professional resource estimate as contracted by the company, and that person has to be independent of the company. He has to meet the 43101 qualifications, and he's got to sign off that this is the resource as determined by the information given to him by the company. Mineral resource classification from inferred to proven. This is key to the fact that the second word there is resource. Inferred, indicated, resources are not reserves. How are mineral resources grouped for public companies? Inferred mineral resources, indicated mineral resources, and measured mineral resources. You can read those, you know, if you're going to get serious about building a spreadsheet, you can read that data up. Mineral reserves, so this is a step up above resources, and you're starting to get into proven reserves and probable reserves, which is kind of like you have indicated mineral resource and you have inferred, which is kind of a lower category. When you get to reserves, you've got proven, and then you've got very, very strong probable reserves that with a little more drilling or infill drilling could be thrown into the proven reserve class. Preliminary economic assessment, that is going into the next higher grade, and I'll leave it to you to read that. Mining feasibility study, this is going to a higher class of data again, requires a lot more drilling or infill drilling or acceptance of the drilling that has been done to qualify for these higher confidence level categories. Okay, as a visual way to show mineral resources and mineral reserves, on the left you have the lower category of resources from exploration. You have inferred, and with a reserve, you don't have inferred. On the exploration side, you have indicated. On the reserve side, that would be probable, and for the measured, that would be proven. So we're dealing with the ones that are the lower confidence level, and you will have seen that in the notes and what we covered already. Okay, we're going to the Lassonde curve. And this is rather interesting. There's another video in our library that covers this. Pierre Lassonde, who this curve is named after for the exploration industry, is a very astute investor, explorer, and he and his partners set up Franco-Nevada and turned that into a royalty company, and it's done really well. But going back to exploration, how this curve works is you're out there exploring, which is lower brown bar there, pre-discovery. So then you make a discovery, wow, everybody gets excited, so the next couple, 3 years, 5 years, there's a lot of drilling going on. They're building out a resource. Oh, it looks like this could become a mine, and it goes way up, and then they got to keep drilling and drilling and drilling, and everybody kind of loses interest and don't appreciate that there's going to be a much higher upside. So they start to build out, and the speculators leave, and you get this long fade back down to where investors will buy it because it's worth at least this. And out comes a resource estimate kind of showing that, wow, this thing does have certain value. And at the beginning of a resource estimate, your in situ values are going to be on the lower end. And as things build, the in situ value goes higher and higher. And that is a component on the spreadsheet that is variable. So we'll get into that in a bit. But on the evolution of the project, you get your first resource estimate, and we're in what's called the orphan period, where just solid investors are holding this because they know there's opportunities for improved value. And then you get the second resource, in our case, second resource estimate. And at that point, things will start to pick up because now you're getting into, we definitely have some established values we can show you, and we're improving it, and we're moving towards a preliminary economic assessment or a pre-feasibility study. It's an onward and upward situation, and you never know how fast it's going to move, but you certainly are into some higher quality opportunities here. So as it moves towards the PEA, we're kind of getting to the point where you would no longer be doing a resource estimate or an in situ value, because the professionals have now taken over with much higher quality data, and they're putting their professional degrees and stamps on the documents they produce. And then you get, as you get up into the PEA, PFS, institutions are paying a lot more closer attention, as are the mining companies. And then somebody pulls the trigger and you get a bit of a, well, if they make you a really good offer, there may not be a bidding war, but who's going to give you a top dog offer on the first bid? So chances are you're going to get an offer. Another company looks at that and says, you know what, it's worth a hell of a lot more than that. Let's put in a higher bid. And then the first company goes, ah, damn, I didn't get it cheap. I guess I got to go more for real value. So that's what the bidding wars do, and hopefully we see one. So if you do research on how to understand the process of building a in situ value spreadsheet, attaining in situ valuations goes back to where is it located, what's the infrastructure, what's the jurisdiction, if you've got good governments to deal with, or are you dealing with somebody that's packing an AK-47 and he writes the rules. But past in situ deals, and this is from research I did, and I only found about 3 places where people actually put some effort into it, and then it seems like they do it and then they walk away because it just, nobody's buying it, sort of thing. But in this situation here, this was done by Stifel Nichols. I believe they're in Europe, UK. This was done in July 2020. They looked at a bunch of different deals and what the prices were that the companies paid when they took over the Explorer as an in situ value of the gold or gold equivalent ounces in the ground. So for some of this, they came up with $79 US dollars an ounce for inferred resources. And I would expect today's 1900 an ounce. I believe that's supposed to say it was done when gold was at 1900 an ounce, but it's been a while since I put this together, so bear with me. Then according to Hamilton Mining in the UK, in situ is currently being priced at 150 to 250 an ounce. That was July 2020. We are asked what an inferred or M&I or P&P ounce is worth in the ground. Our rough guidelines in July 2023, with gold at 1900, they were pricing, depending on the quality of the, infrastructure, reserves, everything else. There was a low end of $20 an ounce inferred, $30 for kind of measured and indicated, and then when you stepped up to, the PEAs and preliminary feasibility studies, that's where you go into a whole higher confidence category, and you can see that right here. You had 20 an ounce inferred, 30 for M&I, but when you went to proven and probable, it jumped up to 160. So that was back when gold was 1900. So that's why I put that in here. It's just a reference of the relationship between the in situ price and the actual gold price at that time. And then that would also be factored into the jurisdiction, infrastructure, etc. Now these don't come with a lot of background details, so you just got to look at it, assess it, try and learn from it, and get a feel of the relationship. That's all it's good for. This is another outfit called Cipher Research. Now this was the first one I came onto, and I found it very interesting because he did a really serious attempt to professionally explain how it was done, and he did a lot of work at finding old mergers and acquisitions and takeovers where producers took over the Explorer, and then he plotted all the prices. So his work went back to 1990, and it finished up around 2014, I think. And he plots in here of some of the deals that were done, and the red dots are the actual prices of the deals when they happened. You can look him up online. He has a little more data on his website, but he's kind of moved on from it. And another one is Ron Husband. He's an analyst with Cipher Research. He's the one that did that work that we're looking at. And then Red Cloud. they got into some serious evaluations. There's a little more detailed and complex to read, but if you're interested in building that spreadsheet on your own and understanding this, then you want to read through all this. And the Red Cloud one was done by Ron Stewart. He's Managing Director of Equity Research at Red Cloud Securities. He did some good work, put a lot of effort into it. I don't know if he's done anything since his original publishing this data, but search it out online. Maybe he has more updated information. But anyways, I just want to say that Rod Husband and Ron Stewart, I really appreciate, what they put out on the internet there, because it helped me a lot to assess how I was going to build this. Okay, so now we're getting into real acquisitions where a major has taken over a gold explorer. And this is one that was done back in Eastern Canada. You can see the blue here is Agnico Eagle, and the gold claims were owned by an outfit called Q3 Mining. Agnico Eagle saw all these resources being discovered around them, and they had there's good infrastructure, and they had the mills and processing, so this would be a good fit into their pipeline of future resources. So they did take them over, which means there was some negotiation going on. So when it was all said and done, Agnico paid them $1.67 a share. That was January 23, 2005 that this closed, and the announcements are out. You can research it online if you want. And certainly Agnico Eagle is one of the top gold producers in the world, based here in Canada. So here's Q3's mining stock performance. This goes back to March of 2023, and everybody's excited and not excited, and then they get excited again, and the stock's going kind of sideways and down until the deal was closed with Agnico Eagle, and the stock was halted, and then it opened 57% higher. So if you were doing a spreadsheet on Q3 Mining, you would have identified that, wow, with the resources they got, they're undervalued. I think I should pick up some shares. So if you did it back in August of 2025 or whatever, anywhere along that period before the deal closed, you made some good money. All right, on this slide we have the mineral resource estimates. So Q3 Mining had, through their resource estimate, an inferred and indicated resource of over 2 million ounces of gold, over 108 million shares outstanding, and a market cap of a little over $181 million. You take that market cap, divided by the ounces of gold, gives you your in situ value. And at that time, it was $86.94 per ounce in the ground. Now this is when Agnico Eagle did their study. Now I'm not sure if it was completed by Q3 or whether it was done by Agnico, but the pre-feasibility study came out just before the deal closed, if I remember correctly. You can check on that. But they had a higher standard here, and this is like the pre-feasibility, which would be done by independent consultants, and they established that it's $117 an ounce in the ground, and that was the price that the deal closed at. So that deal with Q3 Mining and Agnico Eagle, the price of gold at that time was $1,700 an ounce. So their, resource estimates and pre-feasibility studies and everything else, that was based when gold was $1,700 an ounce. I did this chart a couple of days ago. Gold was at $47.80. I believe it's like $4,900 plus a day and still going. But at today's value, gold is 2.8 times higher. So the $117 in situ price that Agnico Eagle paid for Q3 today would be $327 an ounce in the ground. And that is something that you interpret. It's not written in stone or anything else. It's speculative, but it's reasonable to expect that that would apply. So here is $2 gold spreadsheet with variable price opportunities on the far left, second far left column. So what we're looking at first as we go down the list is we don't know exactly how many ounces are in that Goldstorm deposit at Treaty Creek, and that's all we're focused on. There are 3 other potential deposits there that will add to $2 value, but at this time, everything's based on these numbers, exclusive of the other numbers. So what they have on the Goldstorm deposit is, at a very low end, would be 20 million ounces. And at an upper end, it's very probable that there's going to be 40 million ounces of mineable gold there, gold equivalent. So what we do is take our in situ price of $30, and Tudor owns 80% of the project, so we put that into the formula. Total value, market cap, would be $480 million. Their fully diluted share count at this time, when I put this together, was 378,931,270 shares. So when you do the in situ formula and it runs across, those numbers at 20 million ounces and $30 in situ would give you $1.27 US per share value, or $1.65 Canadian at a conversion rate of 1.3. Now, for the longest time, the amount of ounces that we're kind of looking at on the resource estimate of indicated and inferred totaled out at just around 34 million ounces. So in that blue highlighted column, third one down, using 34 million ounces at $30 in situ in the ground, would have given you a share, US share price of $2.15 and Canadian $2.80. Then we go up again to $60 in situ price at 20, 30, 40 million ounces. Scroll across, look at the shares. So what it is that you want to do with the spreadsheet is start looking at what other acquisitions are being done for and see what those in situ valuations were. Then you can take that and plug it in here and say, oh, 30 million ounces at $90 a share in ground, because that's what other deals have been going for, will give us a share price of $5.70 US or $7.41 Canadian. Well, we're not quite there yet, but how about, we're pretty sure we're working with a 30 million ounce number, and we should be at least $60 in situ in the ground, based on what I've been looking at in other deals. This is where you got to do your own evaluation, your own due diligence, your own research, and start seeing if you can narrow down a range of numbers that you think would be applicable in this situation. So if we said we're looking at a real solid 30 million ounces and at least $60 in the ground for the 80% share that Tudor owns, their stock should be trading at $5 to $6.50. And it has been moving up nicely. This is January 22nd, 3rd Friday, whatever date it is. And price is still moving up. And we're going into Roundup and then PDAC, and the word's going to get out, and the price of gold's going up, and people are going to start saying, you know what, I think this thing is undervalued. And they'll do their own numbers. And that helps to draw the price up, because it's worth at least that. And then if a bidding war starts, holy cow, where are we going? So when I showed you that Q3 mining was taken over, or the resource estimate was saying whatever number it was, but the final number with the pre-feasibility was much higher, that's where you want to look at numbers of a potential takeover in the future. So if we had 20 million ounces and we had the pre-feasibility study or preliminary economic assessment, that starts to get into higher confidence numbers. So maybe they say, well, look, you're saying you got 34 million ounces, but it's more like you got 25 at this moment, and still growing. But let's just say we're going to give you 20 million ounces, and we think you should be valued based on a PEA or PFS at a minimum of 120, and you go across. Now you're talking $5 US and 650 Canadian. So anyways, work with the sheets, look at the different numbers, look at how they change, get an appreciation for it. Be a little bit conservative, put your number in, and is the share price trading above or below that? That would start to give you an idea of whether you want to step in and build a position. This is for Teuton Resources. Teuton is a partner with Tudor on the Treaty Creek and Goldstorm discovery deposit, and we own 20%, so it's basically same amount of gold. We're using the same Insitu prices. We're applying a 20% ownership, and then you get to fully diluted shares. Teuton has 62,700,000 shares approximately, and if you go back and look at Tudor, they had 379 million shares roughly. So that affects the ratio that ends up being your final share price. So there's no correlation in price, but there is a correlation in the ounces in the ground, the in-situ price you apply, and the percentage owned. All right, this spreadsheet, Tudor Gold spreadsheet applying variable in-situ price valuations. We're working with some pretty conservative numbers here, really. So this is to help you understand how big things can change when real numbers get applied. So I've got potential valuation after preliminary economic assessment or a pre-feasibility study. So as we've discussed, and as you've learned because you studied this now, that those are higher confidence levels. And when you get to higher confidence levels, you get bigger numbers. So we'll take the 34 million ounces, is it 30 or is it 40 million ounces? We don't know yet. But this is a number that was established in the past. So let's use that as a hypothetical ounces in the ground. We apply $327 to that for the 80%, and that gives us a US price of $23.47 in the ground, and a Canadian price of $30.51 in the ground. And this is January 23rd, and Tudor is trading at $1.55 to 60. So I would say that would be significantly undervalued, but we're dealing with resource estimates this time, not the higher confidence, professionally generated numbers from an independent consultant, independent qualified consultant. But this shows you where the price could go if the deal is done and it was looking at this can go into production. So where the hell did you come up with $327? Well, let me show you. 3 slides back, we looked at what happened between Agnico and Q3 at $1,700 an ounce, factored in today's close to $5,000 an ounce. We came up with $327 in the ground. So it's happened before on multiple deals, and it potentially could happen again with Tudor and Teuton. So anyways, that is why learning how to build an in-situ valuation spreadsheet could identify undervalued situations you may want to start building a little bit of a position in. And once you're building a position in a company, then you're getting all the news releases, you're studying them, then you're discussing with other people, and you just build your own confidence that yes, this is a resource. It's a type of resource that turns into a mine, in which case majors will become involved. Or maybe Tudor builds it into a mine themselves. Well, not very often that explorers end up finding and establishing a deposit and then turning it into a mine. They don't have that experience, qualifications, or talent. But guess what? Tudor does. There's a team that worked together with Silver Standard, and they went on to a company that was spun out called Pretium Resources, and that was sold to Newcrest, and Newcrest sold it to Newmont, the biggest gold miner in the world, who is right next door to the Treaty Creek deposit and right next door to Seabridge's KSM. So the chance that this could become a mine is extremely good. But does the team have the experience? Well, yeah, because the same team that built the Brucejack mine is now managing and controlling Tudor Gold. Joe Osnick, Ken McNaughton, Ken Conkin, their CFO, and a couple other key people. And that team is back together. They were recently put in to run the company in the past year, and they are planning on building a slope decline to get underground to where there's some very high grade cells, and they are going to drill into those cells and establish how much is there, and I believe it's around 5 million ounces at this point. They want to establish better qualified grades and size, but it's looking like they could go underground, mine that high grade, pay off their capex real quick, and then be a very profitable producing gold mine. And with 30 or 40 or 20 million ounces, you've got a long life mine producing a lot of gold. So those are the reasons why I get excited about this stuff, why I put lots of hours in trying to study it, qualify it, and then debate myself and tell me I'm full of whatever and my numbers are wrong, and go back and try and justify why I come up with these numbers. And that's the same thing you got to do before you start putting your money in the ground, in the stock. The value of in situ data. Buy it or build it yourself. Building it yourself can create a valuable due diligence tool. Now, I'm not talking about building the mine here, I'm talking about building that spreadsheet. To create an in situ anchor price, you need to find recent samples of in situ prices from actual buyouts or mergers that have similarities to your target project. And it should be from a completed transaction if possible, that will provide you with accurate data from which you can construct your in situ price valuation spreadsheet. So I'll leave you to look at that. You can go back to it as a reference. The one thing we need to go back to is, you talk about these certain things you have to have in place in order to build your in situ pricing. And jurisdiction is probably one of the biggest factors. I mean, the team that is running your program, managing the company, that's huge. And the second one is, okay, we've got a great team. They can build a mine if they have to, or they can sell it off to a major. That is in place. But can you build a mine in that jurisdiction? So here's some examples of maybe getting into a little gray area on the jurisdiction side. Barrick Gold and Malayan government are set to resume negotiations because they had a big conflict. This is back in January 27 of last year. Barrick, the world's second largest gold miner by production, has temporarily suspended its mining operations in Mali after the government seized close to 3 metric tons of gold worth $250 million from the company's complex in a dispute over tax payment. I mean, that's pretty scary stuff. And I think if you looked at a chart of Barrick, it may have affected the share price a bit. On another situation, it just happens to be January 2025 again, CEO.ca, which is a website where people do a lot of talking and conversing, and they also publish out some briefings. And the chairman's briefing stated gold price surges drives narcos. Narcos being narcotic people, organizations in some of these third worlds, into illegal mining operations in the Amazon. So you can read through there, but they are creating a parallel state in the middle of the Amazon. And that definitely affects the opportunity for companies to develop gold operations or advance them without having them taken over, etc. So anyways, the point is here, jurisdiction is a serious matter. Up in the Golden Triangle, there has been some recent mergers and acquisitions that investors should know about. And over the past few years, there's been majors increasing their positions via financings and mergers and some outright acquisitions. And the big players are Newmont, BHP Group, Hecla Mining, Franco-Nevada, Teck Resources, Freeport-McMoRan. Other possible majors that may get involved are Agnico Eagle, which one of the biggest in the world, Canadian-based, Barrick, which originally owned the SK mine, which is, if you don't know about the SK mine itself from back in the 80s, 90s, you should do some research. Very exciting discovery that became a mine and was mined for 20 years. Kinross Gold is a big player. Anglo Gold Ashanti could be sitting on the sidelines. Goldfields, Alamos Gold. Those are majors. There's also mid-tier producers, and generally projects in the size of Seabridge's KSM or Tudor Teuton's Treaty Creek. It'd be way too big a bite for a mid-tier to come in there. But now when you look at the price of gold, having gone from 1,700 to heading over 5,000 here pretty quick, I think, mid-tiers are generating huge flows of cash into their treasury. So maybe we'll see I Am Gold in there, or BT Gold, or Eldorado, or a New Gold, or Cantera, or a Cisco. Now, they might be able to do it on their own, or maybe 2 or 3 of them band together and take over some of the bigger projects in the Golden Triangle. So there's just all kinds of various opportunities, and definitely something's going to happen with gold and silver getting to the prices they're at. There's institutional investors, mega investors. One is Eric Sprott. He's a Canadian billionaire and respected global investment guru. Eric was an early entrant into the Golden Triangle exploration cycle in investing in highly prospective Golden Triangle opportunities, providing badly needed financial support in multiple projects when the going was tough. Gold was down around 1,700, and everybody was playing tech stocks. It was hard to attract financing and raise money, and Eric Sprott stepped up to the table and started evaluating opportunities there and helped get a lot of them started. And kind of an observation of watching Eric work is he is just so helpful. If you got something that looks pretty exciting and you're excited about it and passionate about it, and you got the skills and experience to try and establish a discovery, he's going to help grub stake you in most cases. But if you don't discover something or don't make it work and you kind of waste the money ineffectively, don't be going back to Eric for a second financing. He doesn't do that. But the work that Eric has done in the Golden Triangle in supporting companies, a lot of them that are involved with the Golden Triangle University project and multiple others that aren't associated with this project, Eric was there big time for him, and he's just kind of looked at as the Golden Triangle's honorary CFO. So other opportunities or investors are the Ontario Teachers Pension Fund, which is involved with a streaming deal with Seabridge. Crescat Capital is involved in financing numerous discoveries, including Goliath and SK. Frank Justra is up there. He's been involved with a couple, and not quite sure all the ones he's involved with now, but you could look that up on the internet. Might give you a clue to different companies you want to build a spreadsheet on. And Ross Beatty, another Canadian billionaire, he's getting more involved up there, and he's picking up some quality projects and helping to build winners. So anyways, it's we got good people, and there's lots of financial backing and investors for real deals. And if you can build a spreadsheet, that will help you identify what the real deals are. So Insitu price data, validity, and integrity. So you've got to establish the validity of the information you're using. Is it related to the project you're building the spreadsheet on? Does it come from common source data around the area you're investing? And does that data have the integrity of the assays, etc., that would come from the drill programs? For public companies operating in the Golden Triangle, we are heavily regulated, and the authorities that we need to answer and who monitor us would be Toronto Stock Exchange, the Canadian Securities Exchange, British Columbia Securities Commission in our case, and possibly the Canadian Investment Regulatory Organization, who watches for kind of weird trading patterns. You know, all of a sudden the stock jumps way up and trades high volumes. Why is it doing that? So I've had a couple phone calls like that, and they're easy to talk to, and they understand whether you're telling the truth or gaslighting them. And I suggest you don't gaslight them. Insitu price data other than the resource estimate is based on previously completed acquisitions and are unvetted by the authorities, the data that you are going to use. Cipher Research, they provide quality work in their reports. Those are unvetted. In other words, they haven't gone through exchanges or anything else or qualified people, but they have put tremendous work in there on how to begin to understand what it is you're doing, and hopefully what I'm showing you builds upon their work, because I'm basically standing on their shoulders. Agnico Eagle and Q3 mining data, find reports like that where acquisitions have happened, and look at figuring out what was the in-situ price before the bid came in to take them over. That'll give you an insight into how you can have your data, which should be on the conservative side, to their data, which is qualified by a PEA or PFS. And analyze the sequential news flow that accumulates in a successful takeover. You know, just read this, look at that, understand it, and use that when you're building your spreadsheet. So I'll put a little challenge out to you. Take the two-ton and or two-door spreadsheet, have a look at some information, look at their latest news release with their updated resource estimate, look at the management team two-door has. They can build this resource out, and they can sell it, and they know its value, so shareholders will get good, fair returns. And if nobody comes to bid on it with the price of gold at where it's at and going up, January 23rd, 2026, and they're going to build this ramp down to do that underground drilling, and I think they're going to establish that this thing could probably go into production and pay off the original CapEx in most likely 3 years, and they'll do it themselves if nobody else wants to do it. So review their latest numbers and then look at the spreadsheet and go, geez, you know, I think it should be X dollars an ounce in the ground. Because I'd be really interested in how you analyze this. So do a quick analysis, do some research, get familiar with what we're doing here, and you might say, I'm not interested in all that. Or you might say, God, I can see that I might be able to use this in the future. Along with all my other investing strategies, this might just be a piece of that portfolio that I can be more secure with, sleep at night with, and build a position. So define what you think that in-situ number should be based on kind of current gold price and the and date, and send that number to me. There's my email. and send it with your name and address, basically formatted like I have below, and I will send you back a nice little keychain. And if you see somebody else wandering around with that keychain, you can go, holy criminal, let's talk in situ values. But if you're in Canada, don't use a US postal code. Okay, so here's some of the people that we work with, our neighbors on exploration. Some of them we go on fishing trips with, but it's the Golden Triangle is almost completely staked. So there's no keeping secrets from your neighbor because he might stake the open ground between you. We're shoulder to shoulder up there, so that's why we're able to come together in the Golden Triangle University project here and share data and give you updates on the various exploration programs. And we've just got tremendous support and participants from Dolly Varden. Scotty Gold participated at one point. Gold Storm Metals is a participant. You'll see their updated exploration results from Kevin Bowes on his presentation this year. And Goliath Resources, who sent Randall Carter, who is working on a special study of the effects of the Eocene time frame of having gold, whereas we've been focused on Triassic, Jurassic. So he's doing some incredible work. And Teuton, of course. But what it is, we just have great relationships. We enjoy getting together for the GTU each year, and we'll be coming up again next year with updates on all these different projects, and maybe we'll have some better news on the usefulness of in situ spreadsheets. So just remember that in the Golden Triangle, there are a lot of discoveries, and precious metal discoveries are generally the beginning of the creation of wealth. So thank you. If you've got any questions, you can email me. And through our presentations, we're not trying to hit you up with like, comment, share, and subscribe and all that. But we really do put a lot of work into this. It's not about making money, but we would like to know that people appreciate what we're doing with this, building this library of information. So if you know somebody that would enjoy following it or has similar interests, hit the share with him. Comment. We would really appreciate comments of, you know, was this worthwhile for you? Is there something we didn't provide in the way of data that would help you? Because we'll try and cover that in the future. And we certainly hope you like the presentations, not necessarily mine, but the other guys. They would appreciate you hitting the old like button there. So anyways, thank you very much, and we'll talk to you next year.